Well, hello everyone, and welcome to our webinar on sales tax basics. I'm Cindy Nellis. I'm here with the Penn West Clarion Small Business Development Center, and we are glad that you've joined us. I know as people come in, we'll just kind of get started, and then we'll get today's webinar ready to go. So as many of you are getting your businesses set up and ready to go, we want to make sure that you have a solid understanding of Pennsylvania sales tax. Your questions may be something like, who needs to be registered to collect? What items are taxable? When does sales tax need to be charged? Or where do I need to file and pay? And what do I have to do to prepare correct records? So we'll try to answer those questions today and many more. We have a team of experts here from the Department of Revenue, and so I'm sure we'll be able to answer all of your questions. The Small Business Development Center partners with the Pennsylvania Department of Revenue to present a four-part series offered monthly on four various topics. Today, we're talking about sales tax, but the other three, which we hope you plan to attend, one is Getting Started with MyPath, one is Pennsylvania Taxes for New Businesses, and next month, we will be having Withholding Basics. So we hope you plan to attend all of these topics. So before we get started, let me just say that we are recording today's webinar, and we will share the recording with you along with all the presentation slides that you see and our flyer that I just showed. If you have a question for our presenter, please enter them in the Q&A, and her team will be monitoring Q&A to answer your questions. And if you have a question for me, your host, you can enter that in the chat. We may be doing some questions to kind of get some information from you as well. We'll use the chat feature for that too. I want to just take a second to introduce you to the Small Business Development Center. We are a grant-funded program here with a mission to help businesses start, grow, and prosper. We spend the majority of our time providing one-on-one business consulting services, and those services are provided at no cost and they're confidential. All you have to do is ask, submit a request for assistance, and we'll be in touch with you to provide that one-on-one consulting service. We also provide a lot of training on many topics related to things that small business owners are interested in hearing. Many of them relate to financial management, taxes, bookkeeping, marketing, social media, human resources, leadership, and the list goes on and on. Most of our training are provided at no cost. There are some that are low cost, and we provide them three different ways: live, virtual, and on demand. In addition, as a client of the Small Business Development Center, you have access to a lot of tools and resources. Some of them are databases that we purchase to gather information for you. Some are guides that we've created or that we know exist that would be helpful to you. And then of course, forms and templates. So we encourage you to connect with the Small Business Development Center. We are here to provide our services to you in your neighborhood. So here's the Pennsylvania network. We're made up of 15 centers, all located at institutions of higher education, and we travel throughout our counties. So we're happy to meet with you wherever you are in your neighborhood. But there is no wrong door. I will provide you with my information here, and you can connect with me. You can also check out our Pennsylvania SBDC website, and you can connect to your SBDC in your neighborhood by going through that website as well. So with that, I would like to introduce you to our speaker. Stephanie Schreck has over 20 years of experience in customer service. She currently works as a research analyst in the core division of the Customer Experience Center at the Department of Revenue. She started her career as a phone representative with the Customer Experience Center back in 2019. Through the years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. So with that, Stephanie, I will stop sharing and I'll turn it over to you.
All right, thank you so much here. Just give me 1 second. All right, well, hello everyone, and thank you for joining us today. Again, my name is Stephanie Schreck, and I've actually am an administrative officer. They just updated our titles with the core division in the Customer Experience Center for the Department of Revenue. Today, we will be discussing about how to properly collect and remit Pennsylvania sales tax. One thing we do want to emphasize in our presentation series is the cost of non-compliance far outweighs the cost of compliance. All right, so our agenda today will cover a wide range of information regarding sales tax and the nuances that go into it. We will be defining what is sales tax, what items and services that are taxable and not taxable. We will discuss who must collect sales tax, nexus, and also some exemptions. We will touch on use tax, how to register for a business license, and then how to remit the tax to the department. And then lastly, we will go over some resources that we do have available for businesses for sales tax. So let's start with what is sales tax. Sales tax is a 6% tax on the sales within the Commonwealth of tangible personal properties, services to tangible personal properties, and certain enumerated services. We will talk about each of these points individually, but before we do, let's explain what we mean by a sale within this Commonwealth. So if you buy an item at retail and the item is delivered to, used, or consumed within Pennsylvania, then the sale occurred in the Commonwealth. If a business sells and delivers an item to an out-of-state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. So as you can see on the map here, we do show Allegheny County has a 7% and Philadelphia has an 8%. This is because of what's known as local sales tax. So during the 1990s, Pennsylvania legislators passed a new law imposing a local sales and use tax on certain counties. So this was done to ensure tax. It was imposed in addition to state sales tax, again in Allegheny County and Philadelphia. The rate in Allegheny County is 1% and Philadelphia is a 2%. These taxes are deposited into a fund dedicated to pay for specific needs for those jurisdictions. The rules are the same, except that the local tax is based on the place of the sale, not delivery. So for instance, if I buy a meal in Philadelphia, I will be charged a total of 8% state and local sales tax on the meal. If I live in Montgomery County and order furniture from a Philadelphia store, the additional 2% local sales tax would still be added based on the location of the store where I made my purchase. All right, so since we discussed what is sales tax, let's just discuss quickly here what are some taxable items based on Pennsylvania law. All right, so tangible typically means something material or physical, meaning you can hold it. So tangible personal property is generally physical property that can be touched, such as furniture, clothing, and vehicles. However, there are items that cannot be felt but are still considered tangible property, and some of these are like electronically delivered software. It is distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. So here are some examples of some taxable items listed within the law. Some of these are clearly tangible, such as greeting cards, helmets, and books. And while others, like telecommunications, are a little less black and white. There are also examples here that are not specifically in the law, but they help to illustrate what kind of items constitute tangible personal property. So you can see how wide-ranging these items are. Now, if you buy any of these or similar items within Pennsylvania, or you have them delivered here, they are taxable tangible personal property. And we do also have a full complete listing that is available in our REV 717 booklet. All right, so sales tax is also imposed on services done to tangible personal property. Basically, the rule is if the item that needs serviced is taxable, then the service itself is also taxable. So for example, if my watch breaks and I take it to a jeweler to have it repaired, that transaction is subject to sales tax because watches are subject to sales tax, aka taxable. Then the repair service needed to fix my watch would then also be considered taxable, subject to sales tax. All right, so here we have some examples of some taxable services. So just to kind of help understand this concept, now I do want to highlight an item. So the first item here is the wrapping and packaging of tangible personal property. And we are referring to services of wrapping them, such as gift wrapping. Okay. All right, so enumerated services, these are services that are specifically taxed. These are not tied to tangible personal property, but are specifically identified within legislation, taxation by legislation. All right, so here we have some examples of enumerated services. These can become very involved, and some do have special rules on how to determine its taxability. So all of these items, again, are specifically outlined in the REV 717 booklet that I did mention earlier. So we do highly recommend that you do check this booklet out when you are providing some of these services. All right, so since we've talked about what is taxable, let's quickly look at some non-taxable items. All right, so there are certain items of which sales tax is not included per the law. Some of those are wrapping materials that are needed to deliver a property, such as bubble wrap, pallets to transport goods, shrink wrap, or anything that's wrapped with the package or used to deliver the package is considered exempt. Grocery store food, unless it is considered ready to eat, such as sandwiches from a deli. Clothing, what we're referring to is what's considered everyday wear. Everyday wear items are clothing that is not required as a condition of your employment, such as a uniform, or considered to be your regular clothes. So everyday items is not taxable. A few more examples here. We have caskets that a funeral director uses in conjunction with funeral services. Regular unflavored water, including, we're including mineral waters as well. And then we do have here list sale for resale. This is a big one for many businesses. So industries like department stores, grocery stores, automobile dealers, they're in the business of buying goods and reselling the same goods. So in Pennsylvania, if the inventory or goods that you're buying is for resale, you are not required to pay the sales tax, given that you'll charge it to your end consumer. And we will discuss that in more detail later on. Okay. So now who should collect sales tax? The Tax Reform Code states that every person who maintains a place of business within our Commonwealth to sell tangible personal property or perform a taxable service is required to be licensed for and to collect sales tax from its customers. So pretty much the law requires Pennsylvania businesses to collect the tax from the consumers at the time of the sale. So it means to make, what it means to maintain a place of business has actually changed quite often over the last several years. Okay, so nexus is basically, when it comes down to, is when a business either has a physical presence or an economic presence within Pennsylvania. So sales tax nexus is just a fancy way of saying a significant presence in a state. If a business is considered to have nexus within Pennsylvania by having either the physical or economic presence, then they must collect sales tax on all taxable sales to Pennsylvania consumers. Okay, so physical presence. So for an entity to have what's considered physical presence, it means exactly that. To fall underneath this category, a business has taxable sales and has some type of physical location like an office or a place of business, an employee even, storing inventory, renting or leasing properties or tangible goods to a Pennsylvania address. So meeting the qualifiers for physical presence means, again, the business would be maintaining a place of business in the Commonwealth. This is going to apply to most of you here today. For the majority, this makes it to where you have a physical presence. All right. So let's just quickly visit point 3 here. So goods and inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, a fulfillment center, or any other location within Pennsylvania does create physical presence. So this means that retailers who have inventory stored are required to register and collect and remit Pennsylvania sales tax. And this is on all sales made by the retailer directly to Pennsylvania customers. We are highlighting this one because many people who sell online are not aware of this. So even though you sell through a marketplace facilitator and the goods are stored in one of their warehouses, but the end customer is within Pennsylvania, you have a physical presence in our state. So speaking of online sales, let's transition to talk about economic nexus. Right. So even though an entity might not have physical presence in Pennsylvania, they could have economic presence. So the tax reform code defines maintaining a place of business within the Commonwealth to include having any contact within the Commonwealth, which would allow the Commonwealth to require the person to collect and remit under the Constitution of the United States. The statement is referring to economic nexus. If a business makes $100,000 or more in annual Pennsylvania gross sales, then that business would be considered to have economic presence. And they must collect and remit Pennsylvania sales tax. So this is going back to 2018 with the Wayfair versus South Dakota decision, which opened up the legal door to expand the concept of nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as the state has a uniform tax rate, it did not apply the new law retroactively and provided some sort of administrative assistance in making tax determinations and filing. Economic presence is an acceptable standard in making businesses collect the sales tax. Again, this is essentially to an effort to level the playing field for all businesses. And what we mean by that is here is an out-of-state business that sells to Pennsylvania customers, establishes consistency in the requirements to collect and remit sales tax. Previously, when Nexus was determined solely on physical presence, these businesses would have a huge advantage over Pennsylvania brick and mortar because they were not held responsible for the collection and remittance of the sales tax. So with the new law, out-of-state businesses are now treated similarly to Pennsylvania business locations if they make over $100,000 in gross sales within Pennsylvania annually. So state sales tax is generally imposed by 44 other states. These states have similar concepts of physical and economic nexus as well, but the main difference between these states and what was just covered for Pennsylvania will come down to the thresholds for economic nexus. Some states have a dollar threshold similar to Pennsylvania, but the threshold can vary. So some states have a number of transactions or dollar thresholds, such as like 200 transactions or the $100,000. To round it out, some states have a number of transactions and dollar thresholds, such as 200 transactions and 500,000 to establish economic nexus. We cannot provide any details concerning the administration of other states, but there are resources available online to help you determine if you might have a filing requirement in another state. All right, so let's just touch base on some exemptions that are regarding sales tax. Okay, so Pennsylvania law does allow businesses to claim an exemption from sales tax for several different reasons. The exemptions are centered on certain business processes. Their taxability depends on who bought the item and how it is being used. To claim an exemption from sales tax, you must complete the REV 1220, okay, and disclose a valid basis for the exemption. Please keep in mind the purchase must be consistent with the exemption reason being claimed. This form also must be filled out to completion, meaning you must select if the exemption is being used for one or multiple transactions, fill in the name and address for both the seller and purchaser, and select the exemption being claimed. Additionally, the burden of proof does fall on the shoulders of the person claiming the exemption. You must supply supporting documentation when appropriate to support your exemption claim. If the form is missing any of this information or the purchaser's signature, the seller does have the right to reject the exemption certificate and charge tax, because this would be considered as an incomplete form. Okay, so who will just some examples of who would use the REV 1220. The first reason you may qualify using this is if you're an exempt entity such as a government organization or a federal agency along those lines. If an item is being used directly and predominantly in a business, in the exempt business process, it will qualify for an exemption as well. So an exempt business process could include manufacturing, mining, dairying, farming, shipbuilding, and timbering. All right, so direct and prominent use means that the item is used directly in the exempt business process over 50% of the time. So for example, a manufacturing entity purchases a forklift that is used in pre-production activities, production activities, and post-production activities, okay? So for the forklift to be excluded, it must be used over 50% in all of these. If it is used more than 50% in the activities, if it was used less than 50% of the time in activities that are not considered a part of the actual manufacturing process, then it would not qualify for the exemption. All right. And another reason to use the REV 1220 is a sale for resale exemption. Okay, so we touched on this earlier, but if you are buying goods and services for resale, you would complete the REV 1220 claiming a sale for resale. Okay. Most of the time, this applies to retailers or wholesalers, again, who are purchasing items and then will be in turn selling to their end users. Okay. All right. We also have the nonprofit exemption or the REV 72 form. This is used again for purely public charities or nonprofit organizations. This is important to note that just because you are a 501c3 status with the IRS does not mean you automatically apply or granted this type of exemption. So the REV 72 form does need to be completed and approved by the Department of Revenue every year. Okay, so if a seller does not charge Pennsylvania sales tax on a taxable item, to a Pennsylvania purchaser for any reason other than a valid exemption, it then becomes the responsibility of the purchaser to pay what's called use tax to the Commonwealth. Okay. This is a counterpart to sales tax, and these situations most likely occur when a seller has no nexus in our state. Okay, so as we just stated, use tax is sales tax not collected by a vendor or seller at the time of purchase, and it is the responsibility of the consumer. So an example of when use tax is due is if your business makes a purchase of taxable items over the internet, okay? From an out-of-state location that is not charging Pennsylvania sales tax. You as the purchaser located within the Commonwealth must essentially make a payment to cover the amount of sales tax that should have been included with your total at the time of the purchase. This is the purpose of use tax. The tax rate is the same as sales tax, 6%, plus the 1% local for items purchased, delivered, or used in Allegheny, or the 2% local sales tax for Philadelphia. Many businesses believe they are saving money by making tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit by the department. So since the assessments include interest and penalty on top of the tax, businesses in these situations have an increased operational cost by not voluntarily addressing these use tax obligations. Okay, so let's just discuss how to register for our business a sales tax license. So in order to collect sales tax, you must have a license issued by us, the Pennsylvania Department of Revenue. This license performs many functions, including demonstrating to the public that the business is duly licensed agent to collect the sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately. Now, to register and obtain the license, you do need to complete the Pennsylvania Online Business Tax Registration application. This will be completed directly on the homepage of MyPath for brand new entities, meaning brand new, you're just starting out. You would simply go out to our MyPath homepage. You do not log into an account. You would simply scroll down to our registration panel and select the first link that is available. Now, if you are an existing entity, meaning you've already have a business account with the Department of Revenue and you need to add a sales tax license, you would log into your MyPath profile and complete the application as a logged in feature. Okay. So also please be aware citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund monies. The money does not belong to the business, it actually does belong to the Commonwealth. So it must be handled accordingly to the law and to the department's regulations. And a business must meet the timely reporting and filing requirements as well. Properly handling of the trust fund money does help secure the success of all businesses by avoiding costly penalties. If you are an entirely new business to Pennsylvania, a brand new entity, we do highly recommend that you do visit the www.business.pa.gov for all of your registration needs that you might have. This is a one-stop shop website that was established to help new businesses get up and running beyond just setting up your tax accounts with the Department of Revenue. Okay, so how would you remit the sales tax collected to the department? Sales tax returns and payments must be filed electronically. We do highly encourage all of our businesses to use our online MyPath portal to file and pay your sales tax amounts. Now, not only are you able to file and pay for current years, you are also able to view previously filed returns. You can access notices that have been issued by the department, request statement of accounts that are available immediately after submitting your request, and you can send messages to the department. So the MyPass system is a great tool to have, especially when you are in the business of selling items. Okay. The department also does work with some third-party vendors who will provide e-filing software for those taxpayers who do not wish to use our MyPass system. We do have a list of approved software vendors available on the department's website. Some important things to remember is the old PA3 forms are not available for download from the internet. We no longer accept the paper sales tax file returns, which is why we implemented our MyPass system. Per updated regulations, any taxpayers who are making payments of $1,000 or more must remit them through an electronic funds transfer or an EFT system. Failure to comply with this requirement may result in an assessment of a penalty equal to 3% of the tax due, but not to exceed about $500. And this penalty will be imposed on all payments of $1,000 or more that is not presented to the Department of Revenue. Okay, so if every quarter you send a check in for over $1,000, you will get hit with the EFT penalty every quarter. All right. So when you initially register for a sales tax license, your filing frequency will automatically be set as a quarterly filer. Now, the department reviews all businesses about the end of the third and fourth quarter to determine if a filing frequency needs to be adjusted. Okay. So just to touch base on some filing frequencies, we do have a semi-annual filers. These are those who has a tax liability of about $300 or less annually. Semi-annual returns are due August 20th for the January through June period, and then February 20th the following year for the July through December period. Quarterly filers are those with a tax liability that is less than $600 per quarter, but greater than the $300 annually. Quarterly returns are due the 20th of the month following the end of each calendar quarter. So that would mean April, July, October, and January. And then monthly filers. Monthly filers are those who have a tax liability that is less than $25,000, but greater than $600 per quarter. And monthly returns are due the 20th of the month following the end of each calendar month. Now, we do have a very helpful form available called the REV 819, which does have the different filing frequencies broken down with a list of the different due dates. Right? The Pennsylvania Department of Revenue does offer vendor discounts for timely filed returns and payments. This discount is limited to a flat rate depending on your filing frequency or 1% of the tax collected, whichever is the lesser of the two. Businesses who are registered for sales tax could also remit use tax as a part of their sales tax return. So if you are familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply apply to the department for a sales and use tax account through our MyPass system, which was discussed earlier. Businesses with infrequent use tax liabilities may use the department system on the homepage to remit these payments directly with us. Now, individuals or sole props, they would be able to remit their use tax payments directly on their PA-40 personal income tax returns. Okay, so some friendly reminders. Filing and remittance varies based on the sales volume and is reviewed annually by the Pennsylvania Department of Revenue. State and local sales tax are always filed together. And a return is still due even if no sales were made. So meaning if you have 0 sales made for the quarter or the month, you are still required to go out onto the MyPass system and file what's known as the 0 return. And penalties and interest do accrue on all late filed returns and even payments. All right, so to touch base on some important resources available, the first very important resource is the REV 717. This is a great document to have, especially if you are new to the business. It, again, will list some ideas for some taxable or non-taxable items. It also has some information regarding petitions for assessments with the Board of Appeals. It has information regarding construction contracts, motor vehicle leases, tax rates, and a lot more information as well. All right. We also have the REV 588 booklet. This is the Starting a Business in Pennsylvania Guide. Again, this is a fantastic resource that does touch on all the basics for new business owners. Okay. The REV 819, this will break down the different due dates based on the filing frequency that has been assigned by the department. And then we also have the REV 1611, and this form will just break down the current interest rates and how that is calculated based on what is assigned by the Internal Revenue Service. Okay. You can contact the Customer Experience Center Monday through Friday, 8 a.m. to 5 p.m. We do have a direct line that does volve for business taxes. And then we also have MyPass assistance line if you are need some assistance using our online portal. And another resource that we do have is we do have 2 ways of contacting the department by submitting an email request. The first one is directly from the revenue homepage under our online customer service center. This can be found on the revenue homepage with the icon that states customer service. And then you can also send us a message directly through MyPass by simply selecting the send a message option under the message panel. Okay. The department does have a voluntary disclosure program. This program provides an opportunity for businesses and individuals who have recently might have become aware of their tax obligations to voluntarily come forward. So in the return of coming forward, filing their returns and clearing their tax debts, taxpayers are only then responsible for the payment of the tax and interest. Penalties for most taxes administered by the Department of Revenue would be waived when the requirements of the voluntary disclosure agreement have been completed. So in addition, taxpayers would only be responsible for satisfying tax liabilities up to 3 years plus the current year. unless sales tax was collected by customers and not remitted. Unregistered taxpayers with the Department of Revenue who have collected business trust fund taxes but failed to remit those taxes may be eligible for the disclosure program. However, such taxpayers must remit the taxes for all years collected. They will not receive a limited look back, and penalties would most likely be waived for all years. If a taxpayer is currently registered or was previously registered with the department, they are not eligible for the voluntary disclosure program. Taxpayers who the department has contacted or pursued collection actions against or investigated also are not eligible to participate in this program. Any taxpayer that's interested in participating should send an email to the email address listed on the slide to request a case number. If you are registered and not currently charging sales tax correctly, you should correct this issue as soon as possible, as audits generally go back 3 calendar years, and you can be assessed for a tax that was due plus any interest or penalties. So taxpayers pursuant of the voluntary disclosure program should not register on their own for the taxes. The voluntary disclosure office would assist the taxpayer once you do contact the email address listed on the slide. All right, well, thank you all for joining us today. That is our presentation.
Thanks, Stephanie. That was awesome. So while we finish up today, I just want to send out a quick poll. That would be great. And then also, I would just like to remind everyone that we do have withholding basics coming up next month on August 13th. We then have getting started with My Path in September, Pennsylvania taxes for new businesses October 8th, and then we'll be back with sales tax basics November 12th. So if this information is something that you know someone else should hear, we would encourage you to send them our way to get registered for these upcoming webinars. I just really thank everyone for coming today. We just want to thank Stephanie and all of her colleagues for partnering with us and making this event possible. You will receive a follow-up email with the presentation slides and the recording probably before the end of today, if not the beginning of tomorrow. We also have an evaluation form that we would like for you to complete. We will be sending that out as well very shortly after we end today's webinar. We encourage you to give us as much feedback as possible, just because it really helps us to know what type of training that you're looking for. So with that, I will end today's webinar. I again thank everyone for coming today and look forward to seeing you at future training events with us. Thank you so much.